Hi, I'm Max Keiser. This is the Keiser Report. The eco disaster, the ecological disaster, the economic disaster, it's all tied together here at the end of time as we know it. Stacy Herbert.
Max, yes, everybody keeps on being baffled and surprised. Remember, we did an episode dedicated to Wall Street was baffled by all the economic data coming out showing things are worse than what they say it is. And everybody has said it's been a financial and economic meltdown. Well, I have a new phrase for you. It's melt through. And I think this is what we have actually been experiencing is economic melt through.
Well, I think we'll just pick up on this for a second because remember after the initial crash of 2007, 2008, you had the stimulus and you also had the bailouts. And then you had a bounce, which was called a recovery. But now, even according to Time magazine, there was no recovery. There was the beginning of what you're saying now, a melt through. Where are you melting through to? You're melting through to a place called depression.
That's correct. Well, first let me set up what the analogy refers to. Fukushima nuclear plant may have suffered melt through, Japan admits. So the molten nuclear fuel in 3 reactors, 1, 2, and 3, at the Fukushima Daiichi power plant is likely to have burned through pressure vessels, not just the core, according to a report Japan just gave to the International Atomic Energy Agency. So it is the first time Japanese authorities have admitted the possibility that the fuel suffered melt through, a more serious scenario than core meltdown. Now let's go to the economic melt through we're seeing in the rest of the world. We need an evil plan to foil our own leaders.
Well, one second on that financial melt through for a second. You mentioned the TEPCO, Tokyo Electric Power Company. They bought off the regulators. And this is what happens when you let private companies do something that the government should be doing. And you end up with this huge catastrophe and melt-through. And, of course, they're totally silent about it, and so is the media. So, too, in the financial sphere. You had a complete melt-through in 2008 when Hank Paulson went to Congress to get $750 billion. But because the regulators on Wall Street are owned by Wall Street, similarly, you had an economic melt-through, which is happening in real time.
Well, this is what this article here is talking about from Market Watch. This is Paul B. Farrell, and he's talking about that we need to defend ourselves from the coming American winter, and it goes with the nuclear fallout situation. This is a financial nuclear winter, and he talks about the top 1% had 9% of the wealth in 1978. Now they have 23.5%. He says the elite are violating the sacred compact between that higher authority, the leader, and his people. They possess their right to rule, as did Mubarak, Assad, and Gaddafi, and a revolution is ignited.
Well, he calls it the elite contract. There's another word for it going back a couple of hundred years. It's called the social contract, as iterated by thinkers of the Enlightenment, and, of course, famously Rousseau, who talked about the social contract. And when the social contract is broken, it's imperative that the people revolt and seek a regime change. I mean, talking about this melt-through concept, you know, I think about people like Lloyd Blankfein, CEO of Goldman Sachs. He's like that monster from Alien. You know, it starts to drip through the spacecraft. Like, here's Lloyd Blankfein. He's like, I'm dripping through the financial system. And he's just destroying things because of the toxicity of the derivatives that Goldman spews out of their toxic organs into the spaceship Earth. I'm Lloyd Blankfein. And it's a disgusting display of toxic financial melt-through. And they don't do jack about it.
So the melt-through in the nuclear industry happens when the container vessel is breached. In the financial and economic system, we see a financial melt-through of the regulations and the regulators. So, for example, Glass-Steagall was the container vessel for a potential financial meltdown. And because that has been breached, we see melt-through. And Paul B. Farrell says that you need to have a plan. He says an evil plan. An evil plan to him is something that the elite won't even think of. It's so masterful, they'll consider it evil. And you need a plan now for self-defense, for counterattacks, for survival. Things are bad out there, and they are going to get worse. Trust no one. Believe nothing you hear. Nothing.
Right. Well, on the containment front, You've got Glass-Steagall, of course, put in place after the crash of '29 when the creation of the SEC and the Federal Deposit Insurance Corporation, FDIC. The groundwork that was laid for the boom that is the American century, created by Franklin Delano Roosevelt as a reaction to the banksters in the 1920s. Position limits on commodity futures, another containment. Margin limits on commodity futures, another containment. And all of these things, the Commodity Futures Modernization Act being introduced in the year 2000, scrapping much of the containment. These are the elements that opened up the floodgates of toxic derivative trading and the alien-like exposure to the global economy from the monsters of derivatives like the blank fines and the Jamie Dimons.
So we're going to look at one little other headline that this is also what Paul B. Farrell was referring to, and this is from Newsweek. Mad as hell. The anger that fueled the Arab Spring is now boiling over in Europe. Could club-wielding protesters be in America's future too? The answer, of course, is in the picture you see in this Newsweek article, and that is people with images of Jamie Dimon, the CEO of J.P. Morgan Chase, the biggest bank in America, one of the biggest banks. And as you see, they have sacks of money there that they're saying that he stole from the American taxpayer.
Yeah. Oh, that's right. The Arab Spring, as they call it, sweeping Europe, will come to America. I think that when it comes to America, it'll take the form of mass, what they call strategic default on all the underwater mortgages that were fraudulently sold to Americans, and they still find themselves. You know, the real estate market, like in Miami, for example, and other locations, have hit new lows. Even despite all of the pumping up by the Fed and the stimulus by Obama, the real estate market is still crashing, and these people are underwater. And as a revolt, the civil unrest that we'll see in the U.S. will not take the form necessarily of people on the street. I think Americans are a bit savvier than this. I think what they'll do is they'll stage a multi-million, single-day mass walk away from your mortgage. This will be America's Cairo moment when somebody organizes on Facebook a 10 million strong simultaneous mortgage default.
But in the meantime, we still have this coming financial melt-through happening, Max. And how it happened in TEPCO situation in Fukushima was because the regulators and the people they were regulating were actually one and the same. So let's look at this next headline, which is actually a video. And this is Jamie Dimon hijacking Ben Bernanke's press conference to demand an end to regulations. He says, we don't need them anymore because we've passed with flying colors the 2 stress tests done upon the banks, right? One by the Treasury and one by the Fed. But then he also says this.
So I made a list of all the things that have already been done and a few things that are going to be done. So the already done, most of the bad actors are gone. They were thrifts, all the mortgage brokers, and obviously some banks.
Unequivocally, Jamie Dimon is lying through his teeth. He is the #1 bad actor. They've got a $90 trillion balance sheet over there at J.P. Morgan that they use to confiscate wealth from Americans and people around the world. Ben Bernanke, if he had a spine, if he had a pair, he would have bitch-slapped Jamie Dimon at that conference and told him, look, we're the boss, you're not the boss. And then he also would have admitted that Ben Bernanke is beholden to the European central banks. That's really what's going on. The reason you've got so much turmoil in the U.S. is that, as Obama himself said this past week, the U.S. will be applying funds to help bail out Greece. Okay, how does that happen? Through the global banking system, of which Ben Bernanke answers to, of which Jamie Dimon is a mere middling management sub-wonk.
Well, but the important word here is actors, and both of them are actors. They're pretending to the American population that the Fed is a regulator and is somehow protecting them from the bankers. The Fed is a banker. They are the private bankers. They are Jamie Dimon. Jamie Dimon is Ben Bernanke. There is no difference between them. So he is lying there. And you know what? Wall Street took this performance as bravo. They gave it an Oscar. The next headline, Wall Street loved Jamie Dimon's speech yesterday. The response is, go Jamie. Yes, this is from Business Insider, and the writer here says, just yesterday we got a text from a friend at a big bank who wrote, the Obama administration continues to beat up on the banks. Not a great way to get more lending to help job growth. All of the new capital requirements and regulatory uncertainty has everyone grasping onto their cash equivalents, such as short-dated treasuries.
Capital requirements, of course, being code for cocaine requirements, as we reported on this show many times. And you also have a situation where it's basically Abbott and Costello between Jamie Dimon and Ben Bernanke. If you remember the famous Who's on First routine between Abbott and Costello, where it's like, oh, I know who's playing this game. And he says, who's on first? And he says, I don't know who's on first. And he goes, no, what's on second? I don't know who's on second. Who's on? I've totally mangled that routine. You can look it up on YouTube. But it's basically two comedians doing a puppet show for a very compliant, corrupted, in-the-bag mainstream media who reports on this stuff as if it's somehow meaningful.
But the response to the performance by Wall Street was bravo, because they know that they are part of this wannabe elite that is going to defraud the population. But let's look at this next headline, a response to Jamie Dimon's performance indirectly. Jim Rogers, long silver, short JPM. So Jim Rogers was interviewed on CNBC, and he says there's an approaching crisis that will be worse than 2008 because there's been more debt. And remember, Jamie Dimon to Ben Bernanke was saying, we can't raise capital requirements because we need to introduce more debt, even more debt. We're plenty fine now. We're so stable. But Jim Rogers is saying he sees something coming worse than 2008, and he's buying silver, he says 5 times, and rice to protect himself. And when he's asked in CNBC how to fix it.
What should they do?
They should cut spending with a draconian matter. They should cut taxes, and they should cut spending to the bone. We've got troops in 150 countries around the world. They're not doing us any good. They're making enemies. That's costing us a fortune. There are many, many other things that we're wasting money on, and that should be stopped.
Well, that's good old long Jim Silver. Laying it all out. He also says in that interview, Stacy Herbert, that he's short one big American financial. Now, over at Zero Hedge, they're speculating that it's probably J.P. Morgan. I would concur. The easiest way you can make money for you hedge fund traders out there is to short J.P. Morgan, go long silver. You're going to make a bundle of cash. And as soon as J.P. Morgan's stock price gets below silver price, their balance sheet is in a whole whirlwind of trouble.
So finally, he says, that the problem with our U.S. economy and the global economy is too much war. Here's J.P. Morgan executive Tony Blair. Tony Blair says West needs wider plan for Middle East. Former PM's call for clearer strategic approach comes with warning to dictators that they must change or be changed. So he wants more wars in the Middle East. J.P. Morgan executive Tony Blair.
Hello, it's Prince Bandar. Is Tony Blair there? Yeah, I'd like to threaten you with a terrorist act unless you give me more money there, Tony, buddy. Okay, I'll give you all the money you want, Prince Bandar, because I'm a kleptocrat. That's my best British accent. All right, Stacy Herbert, thanks so much for being on the Keiser Report.
Thank you, Max.
Don't go away. Much more coming your way, so stay right there.
To a substantial degree, in one form or another, socialism has spread the shadow of human regimentation over most of the nations of the earth, and the shadow is encroaching upon our own liberty.
In the early 21st century, military bases, the network of military bases all around the world, forms the new empire that the United States is trying to build. That's astonishing. Most Americans have no idea. There are more than 250,000, more than 250,000 U.S. troops stationed on these bases all around the world.
We don't have foreign bases in America. We don't have any British base. We don't have any Korean base. We don't have any French bases, or, we just all American bases. And for us, our bases are fine. The noise is our noise. It doesn't bother us at all because they're our bases. But for other people, it's almost like a cancer here for these people. They since the end of World War II, these bases have been here.
We're here to provide a safe and secure environment for everybody. Any questions? Anything else? Did you get everything you needed?
Welcome to the future. Bringing you the latest in science and technology from around Russia.
We've got the future covered.
Hungry for the full story? We've got it firsthand.
The biggest issues get a human voice, face to face with the newsmakers on RT.
Welcome back to the Keiser Report. Time now to go to Washington State and speak with David Morgan of silverinvestor.com. David Morgan, welcome back to the Keiser Report.
It's great to be with you, Max.
All right, David Morgan, this is exciting stuff. You've just returned from Utah, where you took part in an historic event. Tell us what you were doing there, what's going on in Utah.
The House Bill 371 was passed into law and signed by the governor of Utah. I was invited to participate in the ceremonial signing. This is the first state in the several states of the U.S. to put back into law the ability on a voluntary basis to do transactions in gold or silver.
Right. So walk us through this a little bit here, David Morgan. In other words, I've got a pocket full of silver bullion. I can walk into the store and I can buy a pair of shoes and give them silver bullion. How does it work?
First of all, the merchant that's selling you the shoes or whatever you want to purchase has got to say, yes, I do accept silver, because he voluntarily does or does not. So it's got to be voluntary on both sides. The law is very strict of what silver and gold they would accept. And for right now, the bill that's passed in the law, you can only use silver eagles or gold eagles. So only coinage that's minted by the federal government is accepted by this law at the current time. So that's sort of important. So what is going to take place is there is a depository that is already set up that people can deposit their gold and silver eagles into and be issued a debit card. Now it makes the whole transaction process pretty transparent, where you're able to walk into that merchant and, use a debit card, similar to any debit card, and buy whatever you're going to buy, and it just takes the appropriate amount of silver and gold out of your account. So once this is implemented, and it should be soon from what I've been told at this meeting, I think it could really, catch on.
Now, David Morgan, on the political frontier, it sounds as if you've got a bit of a standoff developing between the states and the federal government, because the federal government, and the Federal Reserve Bank are really not for this type of conversion out of fiat currency into precious metal-based currency. Is this part of the standoff we're seeing between the states and the federal government? Because it also applies to other political issues as well.
Well said, Max. Yes, I do. I think what you see is Utah has the ability to stand up for states' rights as outlined in the Bill of Rights. There's certain powers that were given to the federal government, on a very limited basis. And the states actually have all the power beyond those limited abilities of the federal government. And, of course, the federal government has usurped all kinds of power really outside the purview of the Constitution. Utah says, hey, wait a minute, states' rights. No state shall issue anything but gold and silver for payments of debt. That's the law. We're implementing it. We're putting it into law, and let's see what happens. One thing I'd like to address, Max, and you'll probably get to it anyway, but Gresham's law, the idea that, well, why would I spend a gold coin that's appreciating in value versus the fiat currency that's depreciating in value? And because of that fact, how much traction will we get in this, this movement, you might call it, in Utah?
Yeah, well, that's a good question, and I've seen it raised on the blogs. And people are suggesting that, well, this is a way for the state to get people to get out of their precious metal positions and to liquidate those precious metal positions. And it's a way for the kind of the intention being the opposite of what we're suggesting here, that there are some benefits and as part of a trend to move away from fiat currency. But I would imagine the answer to this would be that you need to start the circulation of precious metals trend somewhere. And once it hits a certain critical mass, then it takes on a life of its own. And people then, the benefits of having a currency that's not being, the purchasing power is not being whittled away from inflation overcomes the perceived shortcomings of the fact that you're swapping out of fiat for precious in the very short term.
You can look at both sides. One is the free market's going to make the determination. So there's somebody out there perhaps that bought silver at 10, it's sitting there at 50 momentarily, and they say, I want to spend it, and they do. That's an example. The other example is, let's take the Gresham's law to the extreme. And that would be what Hugo Salinas Price pointed out in one of his early articles, is that just the idea that you can now start saving in gold and silver, maybe people just start saving that, spend very little, but at least it brings the awareness of sound money to the forefront of a lot of people that haven't thought of it before. Plus, you got to look at the free market. Maybe a lot of merchants will give a discount if you pay in silver or gold, whereas if you're paying in fiat, you have a different price. So I think there's lots of ways that you can see it actually, get a foothold and move onward from there.
Right, that's a good point. In other words, the merchant is very interested in getting a hold of this appreciating asset, this appreciating currency, so they might be willing to offer a discount, which would give further incentive. And the other point you make in terms of savings is a very key point. Savings is something that is the inverse of what most people in America have come to understand to be their daily management of their finances, which has been dominated by consumption and debt. So here you have the opposite of this, which would be savings and watching your savings appreciate in value. So let's say that in the state of Utah and in a few states around the country and maybe one or two countries around the world, they say we're going to go to a silver standard for commerce. What does this do to the above ground value of the above ground stock of silver, of which, depending on who you talk to, is, let's say, between 800 million and 1 billion ounces? Does it increase the demand? And if so, does it affect what happens there on the dynamics of supply and demand?
It would put great price pressure on silver. And I believe, it's already there, as you well know, but put much, much more on it. Because if you go back into history and you look at, what the average wage for the average person was back in the late 1800s, you're looking at $1 a day. And a constitutional dollar isn't even an ounce. Today's U.S. Silver Eagle is 1 ounce. I know that. But a constitutional dollar is about 0.76 of an ounce, or roughly 3/4 of an ounce. The point is simply that $1 per day was a pretty good wage at one time. So in today's fiat world, that might be $100, let's say, per ounce. And we're not there yet. And I believe we're going to get there, maybe surpass that. But once the real value is determined, and we haven't, in my strong opinion, determined the true value of silver yet, you're going to see lots and lots of upward pressure. That's why this Gresham's law is kind of important to think about, because people, once they feel that they're getting fair value for an ounce or 10 ounces or whatever they determine to use in the marketplace, then you probably see a lot more transactions take place in precious metals. But if they believe strongly that it's undervalued, then the tendency is, of course, to save it.
All right, let's talk about Gresham's law for a second, because it's something that Bill Black, the former regulator during the S&L crisis in the U.S., speaks about often as well, as being one of those, if you will, behavioral economic aspects that drives markets and finance underneath the surface a little bit. Tell us, explain Gresham's law, how it applies here. What is the law?
Gresham's law, it's commonly stated that bad money drives out good. It's more accurately stated that bad money drives out good if the exchange rate is set by law. But regardless, what it really means is that if you've got gold and silver appreciating and fiat depreciating, people will make a choice. And the choice usually is that I'll spend the fiat, it's depreciating, and hold on to the gold and silver. So there's a good argument to be made that, even with this enactment in Utah, that there won't be a lot of incentive for people to spend their gold and silver.
Right. Well, it sounds almost as if you could apply the same concept that's used in the fractional reserve banking system, the velocity of money concept, which is to say that loans become more plentiful the more that they are recycled through the banking system. You could say, apply this to silver and say there's a velocity of silver concept here, is that the more it's used, the greater demand there is for the silver, and therefore the price goes higher. So actually, by spending your silver, you're increasing the price of the savings that you have left in your silver savings account. But let's move on to supply and demand here for a second. The CPM group, what's the most bullish data in the report that's just come out and the most bearish? I know you track this stuff pretty closely over there at the Morgan Report.
One of the more bullish aspects is China. The amount of demand from China, and it's, of course, twofold. There is investment demand in China, but particularly the industrial demand that's really never thought of thoroughly. If you go back to the Silver Institute's 2000 issue, the amount of silver used on a per capita basis in China was 1/70th the amount of silver used in the Western Hemisphere. So United States and Canada, for example. Now it's about 1/20th. So it's been about a four-fold increase in the amount of silver used, cell phones, laptops, anything electrical, in China as they build and modernize their whole infrastructure. That trend continues and continues strongly. So right now they're using about 1/20th the amount of silver per capita that they were using several years ago. And again, that trend continues. So if you look at what's going on in the solar energy field, a lot of solar panels produced in China, the industrial side in China is huge. On top of that, you have gold and silver availability for investment in China as well. Well, it doesn't take much imagination to think about 1.4 billion people in China. Certainly not every one of them is going to buy silver unless, of course, they catch on to the Max Keiser, buy an ounce situation. But seriously, there's a lot of pent-up demand available in China and, of course, other places as well. I see that would be one of the most bullish things. On the bearish side, what's interesting to me is that the recycling has started to increase. And as I've thought about it more and more, it's very likely because there are more electronics. Some of them can be recycled. Some of them are uneconomic to recycle, but they're mandated by governments to be recycled. For example, in California, some of the circuit boards that are not economic to recycle, still the law states that it must be. So even at a loss economically, the government has stepped in and said this silver must be recycled. So the idea is that I thought with the photography going to, very low level silver halide photography and replaced by digital, that recycling would be in a major downtrend. And it has been for a few years, but now it's starting to come back up. So I'd say that's slightly bearish. That's about the most bearish thing I could find in the report.
All right. Well, that's all the time we have for on this episode. David Morgan of the Morgan Report. Thanks, as always, for your contributions on the silver side of things. And would you say the trend, the bullish trend, is still intact? Is that your basic bottom line?
Absolutely, Max. You've seen my lecture there in London and also in France. I'm extremely bullish. You've seen my 10-year projections. Certainly, the price of silver, like anything, goes up and down. But we're far, far, far away from the ultimate top in the silver market.
And that's going to do it for this edition of the Keiser Report with me, Max Keiser, and Stacy Herbert. I want to thank my guest, David Morgan of the Morgan Report. If you want to send me an email, please do so at keiserreport@rttv.ru. Until next time, this is Max Keiser saying bye, y'all.